Hello retail traders, this is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And we're going to talk about earnings and a few of the indices, the IWM, the QQQ, the SPX, and the SPY. So we've got a fairly decent earnings watch list this week, not as good as last week's, but there are a few major ones that we're going to watch, and that's going to be airlines, and we've got Tesla on here, and Google, and Intel, and Coca-Cola. So we're going to kind of run through these real fast. On Monday morning before the bell rings, we've got Verizon, Domino's Pizza. And then on that evening, we don't have really much going out. And then we got Tuesday, we got Lockheed Martin, Coca-Cola, Philip Morris, PM. I'm going to put that on here. General Motors. And then we got Tuesday evening, Capital One's on here. I don't know about that one. Oh, ENPH. That's one that I always like to watch. And then Wednesday morning we got GE, AT&T might be one to watch, AT&T. Then the big ones are Wednesday evening with Tesla and Google. We got IBM on here and Chipotle. So I think Wednesday evening is going to be the big one. And then Thursday morning, American Airlines, Southwest, Honeywell. And then after close, we got Intel. And that's about it. So we'll see what I got on my watch list here that I accumulated earlier today. And we'll go right on from there. Start with the IWM. These are all on a 20-day calendar. You can see we've kind of consolidated. Now, the way I feel about the market, I heard a few things last week and the week before that the fat cats and the millionaires and the billionaires, the hedge funds, think we're at a too high of a multiple right now. And they were saying that back, all I heard last week, and I got into a few arguments with Schwab and CNBC about tariff this, tariff that, tariff. And they tried to do that and pull back the market. We called the bottom on it and it bounced back up. Now we're at a double top with new highs. So I'm very bullish in this market. The fat cats mentioned last week that the retail traders were buying the dips, and that I think the institutional buyers and the hedge fund managers are wanting to bring this market down, that Trump's in office. But Trump is a business president. So they were hollering and screaming about inflation. Well, I lived through the past 4 years of inflation. And let me tell you something, it got high. And I can go on from the food costs that I was paying to higher insurance, auto insurance, accounting went up 30-some%, rent went up almost 25%. So a lot of things went up, and I didn't hear these fat cats whining and concerned about that too much. And then the tariffs come in, and now they're all worried, scared to death. And I'm not. I'm more bullish now than I was back during the Biden years. But I knew the Biden years was totally a big scam because we printed so much liquidity. We printed $14 trillion. And that's what these institutions like. The government spending a ton load of money, and then you, the taxpayer, having to make up the bulk of it. So I'm bullish that Trump's in office. The fat cats are not that bullish, but they missed the boat, I think. Nobody called the bottom. I didn't hear none of them call the bottom at the 200 SMA on the weekly time frame like I did. and we had a nice bounce to a new high. So I'm bullish, but I think we need to be a little patient and let the institutional guys kind of bring the market down just a little bit to buy the dips. So we got the IWM, and let's pull up the chart and we'll go through all of them. IWM right here, I'm going to move this to the weekly time frame, and I'm going to show you how much of a run we've had on this here IWM. We almost ran up to a head and shoulders, so this still has more room to climb. Now we got two big old doji candles right here spinning tops, which means we consolidated. The buyers and sellers are about equal. So this coming week we need to break a resistance for us to stay bullish right around 224.67. And if we can break that resistance level, this is the IWM, we could easily run this all the way up above 230, around 233. For right now, we're going to keep that 50 SMA on the weekly time frame as support. As you see, the 9's starting to cross up. We did have a nice recovery, and I'm going to be using that 50 SMA, the body of that candle right there, that green candle, for support this week to stay bullish. It's right around 216.65. Then we'll take this to the daily, see if we see anything different on the daily. Now we've rolled up the 9 on the daily, and we got to break that resistance of 224.67 for this thing to go higher and break out. We do have a hard resistance right around 226.16, and if we can break that, we should be able to run this all the way up to 230. 230, and then up to the hard resistance up here off this head and shoulders, which is that blue line right around 233. So support to hold this week, 216.65, and resistance to break right around 224.67. QQQ had a real good day the other day. We've run this thing all the way up to an all-time high on the yearly. Again, you know, these fat cats, they've just got it all wrong. They're bringing their bias politics into trading, and I don't think one should do that. Politics, yes, you need to know a little bit about it. What's going on in government? What are they spending? What are they taking away? But when you get involved in bias politics, that's no way to trade. And that's what they've done here, the institutional buyers. And most of them are progressive liberals. So we're going to be looking at a new support here. I'm going to get rid of these, cancel them out. And this is on the weekly time frame. As you can see, we created an all-time high on the weekly. We had a nice little recovery bounce off this, and this is shaking all them fat cats up. So support to hold is going to be this previous high, and we're going to run a body right across that wick, right around 541.81, and that's got to hold to keep this thing bullish, and that's a $20 dip. So let's take this to the daily. And we're going to have the 21 and the 9 be supports on this QQQ, right around 556.81 and right around 550.33, with a low support of 541 if it does get kind of drastic around here. Then we do have a triple top, and we're going to draw a trend line across that and see if that matches up to anything. Right there on the body of that to the body of that. So, you know, somewhere down in that 440 to 444 level, 441, 442 to 444 is going to be your solid support. But we want the 9, the 21 EMAs to hold, or we're going to dip down to this triple top. And that'll be like your 1, 2, 3, and that should hold right there. So I'm going to set an alert just right above that triple top. And that alert's going to be at 544.21. That's going to be a triple top support. Then we got the SPY on here. All-time high on the yearly, or at least yearly high. We've had a real nice recovery on these stocks, with the fat cats complaining all the way up, saying retail traders are buying the dip, buying the dip, buying the dip. Well, hell yeah, we're buying the dip because we're bullish, and they're biased in their politics. So we created an all-time high, and we're going to do the triple top again for support on the weekly. Right around, man, we're pretty close to it, right around 618.77. So if that doesn't hold, that's where I'm going to put my first alert. 619.40. And then you got the 9. I'm going to go ahead and draw a trend price line across that. And then we're going to bring the 9. We're going to just use the moving averages as support levels. 606.81 for a low. I mean, that's low. That's low. Actually, we're going to bring this up. I want to bring up to the body of that candle right there. Right around 611.22. Then we'll set the alert right above that. Well, we'll just leave it like it is. And then the low support, if everything's getting nasty, 591. 591.70. And that's your low support. So on the SPY, this is very bullish. We got to keep it above the 9. If it doesn't hold above the 9 on the weekly, then we're going to dip on down to that 21. But it has to hold that 9 EMA. And then we got on the daily, oh, it's positioned just perfect on the daily, that triple top. So yeah, right around 619, 619.40. If we can hold that, we're going to stay bullish. If not, we'll drop on down and hit that 611.22 for a strong buy. And then we got the SPX, which I got suckered into trading Mr. I did 2 successful trades on MSTR, and then my third one I just got wrecked. So I made it back up with the SPX. It's always my lifesaver. Now we're at all-time high on, yearly high, and I think we hit the all-time high on the weekly too last week. So the triple top again is going to be your solid support. If that doesn't hold, then we're going to use the moving averages. Right around 61.74. So let's go ahead and put that price line on here. For your first support, 61, 68, 67, more or less 61, 67, with a double top right here at 61, 20, 10. So that's right above the 9. So we go to the daily. Real good spot. That's a real good support. And the first alert, if it doesn't hold the 9, which is going to be your solid support, as long as you hold that 9, you stay bullish, right around 62, 61.50. And then we come back and we try to hit this 21 EMA, and I'm going to set an alert right above it. 21 EMA on daily. As long as we hold this area right in here, we'll stay bullish, but we definitely stay bullish if we're above the 9. Now we've touched the 200 and the 21 here and the 21 here, and there's no reason why we can't come back and touch it again. and then bounce up and break new highs. We did have a new high last week, and like I said, man, we called the bottom on these trades, and they've run all the way up. Now they're kind of, out of the ordinary, and they need a little bit of pullback. Some of these call outs, like Netflix, these idiots are calling Netflix to 1,500. Are you kidding me? I mean, I wanted to short it, but we pulled back. But fat cats really love Netflix. I'm not into Hollywood, so I can't stand the company. So those are the 4 indices that we like, and we're going to go through some of these earnings. Nope, let's bring that back up. Where was that at? Let's start off with Tesla. The big earnings this week, I think, are going to be Tesla and Google. And then we've got airlines. Now, UAL did have a little bit of earnings issue, but Dow had real good earnings. I don't think airlines have slowed down a bit. I still think travel's in the game. You're in the middle of summer right here. And so I don't think it stopped people from traveling at all. These threat of tariffs and deeper recession and depression and all this other stuff. Right now, I've got one of the most bullish presidents in our country that I've ever seen. He let the private sector do their stuff, instead of government mandating who's going to win and who's going to lose. Let the private sector figure that one out. So we got Tesla right off the bat here. I need to put this little flag up here so I can get my Tesla on. Tesla's got a symmetrical flag. We're going to clean this up. Now, the fat cats can't stand Tesla. They used to love this guy. And then he went out and bought Twitter, and it just screwed everything up for them guys. And I'm all excited that he did do that, because it takes a little bit of away from the progressive liberals. So there's a symmetrical flag, and we've had a 1-2 touchdown here and a 1-2, so we could get up here and touch the top right around 345.81 into earnings. And let's go ahead and put that alert right there. Mark at or above at 345.13. Then we could have a head and shoulders to a double top up here if she decides to go ahead and run and something good happens out of news or something. And to stay in this flag, support's going to be off the 200 SMA and the 200 EMA. So we're going to put a line, a price line right here on the bottom of this here candle pattern right here, which is a pivot point. And we're going to put that price line right there, and that matches up close to the 200 SMA. And then we've got the 200 EMA, which would be the 1, 2, 3 down here, which I would love to see, and buy the dip. So that's right around 301.63. We'll go 303. 303 for Tesla. And then resistance to break this week is going to be right there at a yin yang at 334.93. So if we can break that, I think we can run it up to the top to this 1, 2, 3 area at 345.13 and even make a double top out of it. But to me, this is a good looking chart pattern. It's called a pennant flag. And we could easily pull back to the bottom of that flag and then play inside that channel. That's Tesla. Airlines, AAL. We hit the 200 here on the daily. And support to hold is going to be the 50, right around 1153. Actually, let's raise that up right here to this head and shoulder line right here. Your left shoulder, your head, and your right shoulder. We'll put a price line straight across right there. 11.95 to hold, to stay bullish. And then resistance to break will be the 200 on the daily time frame. So I'm thinking good things for AAL, but it's one of the bottom leaders. Intel is another one. I always like Intel down there around 20 bucks, and I called it out at 20, and it's run up. And I have a resistance at 25.07 to break, and support again. Let's get it back down, off the 50, off the 200 right here, right around 21.83 for support. And if that doesn't hold, we could easily drop down to this inverse head and shoulders right here at $20. Google's going to be the big one coming out. Now I'm really going to keep a good eye on Google. You get mixed messages when it comes to Google. When it comes to advertisement. So if people are still advertising, Google's going to be a good one to watch and a good one to trade. Now we did hit a new high there on the dip as we pulled back, and that created a head and shoulders, and we broke out of the head and shoulders. So that 9 is going to be your solid support to keep this thing bullish. And we're going to put a price line right above that triple top breakout. 1, 2, 3. So right around 181 something. 181.09. If that holds, we stay bullish, and that'd be a $4 dip back up to a new high breakout. We have a Darvis box right here of resistance with a gap, and we're going to take it to the gap at 191.42. Stay bullish. We beat above the 9 on the triple top. If that doesn't hold, we'll go down to 177, and then a strong buy right around 174, 173.86, 174. Now I'm going to be watching this one real close. I think this will be a game changer in the market. We've had a great run up. But you do see we do get some volatility, and we get straight bounces back up. So if this thing pulls back, I'd go long for at least a week in this trade and run it back up, play the weekly. That's what I would do come Monday or when the earnings come out. So again, I think we're going to pull back to the 9. If we don't hold the 9, we'll hit the 21 with a strong buy down here off the 200 SMA. We got AT&T. Now this is also one that they were really calling out last year, and we had a nice big bounce on it. She run up $9. This thing could easily come out with earnings and drop down here to a double bottom off the 200 EMA and SMA. And be a very strong buy. So let's go ahead and put a price line right there, just right above that 200 EMA, and support to hold. I think it's going to be right in here to stay bullish, right around 26. Let me see if I get this in here. $26.35, but it kind of had a pullback already. So 25.42 I think would be a very strong buy for this stock right now, and then 26.35 to keep it bullish. And then if it wants to run up, it's got to break the 9 and the 63. So somewhere right around 27.38 to break resistance. It'll be one to watch. I think it's kind of overbought. So if it comes back down here, hits the 200 on the daily, I'll run it back up. Verizon, I know they're making a shitload off me. I've never been good at trading this company. I've tried. I think my win record on this one's like 30%. So I really don't like trading it much. If it comes down to 39.42, off the inverse head and shoulders, I might take this trade and swing it to the upside. Again, that's 39.42. Resistance to break at 41.24. Coca-Cola is another good one. Now we have had some pullbacks on Coca-Cola off the 200 EMA already, and we bounced up off that last week. I'm not a Coca-Cola fan. I've probably drunk 1 tablespoon of soda pop in the past 3 years. So I just don't like what it does to my gut. I don't like what it does to battery cables either. So we got a low support off the 200 right now. There are fat people that like to drink this stuff. Most people with big gulps are obese. Usually got a Coca-Cola in it or a Mountain Dew. So we got to break the 50 SMA for it to be bullish. 70.75. Support to hold right around 68.79 off the 200 EMA on a quad bottom. And that's more or less a solid inverse head and shoulders. So if it gets down here to 68, I'll keep this thing on watch. 68.79, but I'm not a Coke fan, so I won't trade it very much. Same as Chipotle. Now, you know, I don't like these sandwiches either. I do. I'm picky today, ain't I? So we got CMG. Now this one had one crazy run before the split. I think the split affected this stock real bad. So we did pull back to support last week. Let's look at the weekly on this one here, see if we can see anything that would excite me to take this trade. On the weekly, we're at support. We're definitely at support on the weekly. So if this thing doesn't hold, we got an inverse head and shoulders down here. And that'll be your support level. Right around under 50 bucks, right around $50. So this could bounce off 50, and if earnings aren't that good, it can easily be a very strong buy down here off the double bottom. So let's keep that in mind. Right off the 200 or right off the 50. Right around 50 bucks. And then resistance to break, of course, if they're good. Now they were priming this stock up last week. People like to eat here, especially the younger crowd. I don't like them. I had a free Chipotle burrito one time, and the thing was bigger than a donkey dick, and just slushy, and I just didn't like it. I just didn't like it. I'd rather make my own. So this is definitely a market maker, but the fat cats love this stock. I don't. $50. We're going to put in a little alert right down there, and if that holds, we stay bullish. What is that? I said that's the inverse head and shoulders. Like type note in there and then I'll know. That's on the weekly. And I'd rather use the weekly than the daily on this one here. The daily, where it definitely hits support off the 50 SMA. So you see this here, all these resistance levels right in here. Let's go ahead and draw a little price line or trend line from that body right there to that body right there. And that's where we pulled back last Thursday. And that's right off the 50 SMA. So if we can hold that, we can come up and hit a 1, 2, 3 right around $58. $5 bounce. But we got to break that 200 at 55.8. Whoop. There's your little pivot point area right in here. We're going to bring it right above that too. It's hard to say. I like that wick right there, so I'm going to somewhere around 55.72 to break this coming week. If we can break that 55.72, we can run it up to 57.12. And then maybe take it up to the triple top up here right around 58. This will be a good one to watch next week. Although I don't like it, I still can't be biased in my stocks. I've learned my lesson from that. And I'm sure not biased when it comes, I'm biased when it comes to politics. I hated Biden. And I support Trump. But I also traded well during the Biden years. I didn't let that bias get into my trading. Although I knew that there was a lot of, that it was market was artificially raised by the printing of $14 trillion in 4 years. Love, we got Southwest Airlines. We had a huge breakout on Southwest Airlines last week. Support is going to be the triple top, quad top breakout, and we're going to go ahead and draw a trend line. From there to right there, we have 1, 2, 3, and 4. Boom! So this is going to be a solid support. We could break down and pull back to around to the 21, and that's where we're going to set our alert at, and that's what we're going to call as a support level for this coming week. And then resistance to break will be definitely the double top up here, triple top. Right around 37.70. So I can see this thing pulling back. Look at the run it's at. They were wrong. Last earnings came out. They couldn't give a forecast. They could not give a forecast, and look what the stock did. You know why? Because these tariffs have not affected travel one bit. Travel's gone down in cost. I've been booking vacations, looking at vacation spots, and I can get these vacations for $200 to $300 less in a package deal. Right now, $400, $500, $600 less than what I could have got at the end of last year. The price of fuel has gone down, which means airlines can make more money. Price of fuel is at $4.50 a gallon here in Missouri. Now it's down to $2.37. We had a war on fuel during the Biden administration, the war on energy. So I expect airlines to, also I'm going to put a little support line right here into this gap, because we could hold that price line right there. In fact, I'm going to raise this alert up to that bottom of that gap, and then if that doesn't look, I'll remind myself to go back and look at this other support off the 21, and I'm going to go ahead and put a price line on that 21 for right now, and that'll be right here on that previous high. So I got two of them. I got this one right here, and I got this one right here. I kind of like this love. If we can get a pullback, I think we can get a bounce back up. We kind of already had a small correction on this stock already on the breakout. So airlines are really in play. ENPH, oh boy, this thing's been hit hard. Let's look at the 3-year time frame on this. We could get a reversal in this one here. They got news last week, shipments of the IQ battery 5P with higher domestic content, U.S. federal requirements. So this could, underperforms competitors is what they say here. Actually, the earnings have got better. We got to break the 9. We break the 9, we can get up to 48.80. 58.41, and then to the 63 for a swing. So I might swing this to the upside if we can hold 33 bucks for a double bottom. Actually 34.38 adjusted. 34.38 holds. I'll run this back up and break the 9, 21 and the 50 SMA to the 63. So I'm going to keep a good eye on ENPH. We got one of my worst companies out there, but this is one that fat cats are all in. I think it's one of the most corrupt companies out there right now, and that's General Motors. So we're going to put a price trend line. This is on the weekly. Let's take this to the daily. Take it back to the weekly. Weekly's a little bit easier to read. Nice head and shoulders right here. So we pull back to the 9. EMA on weekly. That'll be your support around 50.85, and we'll put price line right there at 50.84. We'll keep a good eye on this one here too, General Motors. I think it could pull back. We did find some resistance up here, and it's kind of consolidated off that resistance level. 54.36 has to break. So I'd rather see the thing pull back, land on the top of this shoulder line, and then kind of keep that in there. If not, she'll pull back to the 63. 47.64. And we got PM in here, Philip Morris. God, look at that. Price target raised to 200. Smoke, smoke, smoke them cigarettes. Smoke, smoke, smoke yourself to death. Meet you at pearly gates. Support for right now 171.13 off the 21. That needs to hold. If not, this thing can come back to 156, have about a $20 drop with a double bottom right there at 165. So I'm not going to be too bullish on this one here. I think we need to pull back. It's had too good of a run, almost, well, from $88 all the way up to 186, $100 breakout. So this thing needs to pull back. IBM, Warren Buffett couldn't even trade this thing right. Now I bet he regrets getting out of it, if he's still in it. I think he's all out, but it just didn't do nothing for him. Now look at it. He's trading this around 100 and something. So your support level to hold is going to be the 9. And then we've got this right off the 21 channel right here of support between 262 and 267, with staying bullish at 277.59 for a double top up here, triple top at 292.93. We stay above the 9. We're bullish on IBM, but I think this thing can drop to around 267 to 262. Then we got O'Reilly. O'Reilly's just a monster. Just a monster. It's always been a monster. So support 84.71. Stay bullish, 88.88. And resistance to break, 94.53. Honeywell, another nice breakout. Everything broke out. You heard the fat cats whining and crying. The market's going to go into a recession and tariff this and tariff that. They're been full of shit. The guy said last week that he's getting out of tech and he's buying small caps. And then we had the killer run last week. All the numbers that came out, the CPI, the PPI, they're all good. No sign of recession. And then they just get in there and they try to nitpick, try to find something, one thing, which in Biden was in office, they would say this market's bullisher than hell. You're dealing with a bunch of progressives at Wall Street. I've been around long enough to listen to them talk. 21 years every day watching these guys. Support 233.40 on the weekly to stay bullish. If it doesn't stay bullish, we drop down on Honeywell to 288 off the 9 for a strong buy. LMT, Lockheed Martin. Now this is going to be, we had a fallen wedge breakout and you can see it's kind of had some volatility. I think this one's undervalued. We got to break the 63 to become bullish. And we got to hold 453.78 to stay bullish. So we could play within the channel. And if it does break 480.86, we could see $500 on this baby. $20 bounce. If earnings come out good, I think they will. I think they're going to be excellent. Then we've got DPZ, Domino's Pizza. Last one. Everybody likes pizza but me. Again, you know, it's something that I don't eat much of. I'm staying away from carbs. We got a support gap right in here. That's the first thing I saw right there, and that resistance got a yin yang. So we're going to go ahead and put a price line right there to stay bullish, 443.32. We're even off the 63. Raise it up just a little bit. Right there on that candle right there. If we stay above 462.29, we're bullish as hell. Then we got a triple top up here. We've got another resistance to break right here. $476.40. If we can break 476.40, we'll move higher. And we'll come up to these triple tops up here. Be a hard resistance. We've got a consolidated pattern off the 21 and the 9 EMA on the weekly. So let's go straight to the daily. 462.29's got to hold. If it doesn't, we fall back down and hit the 200 EMA on the daily time frame. Around 458.15. I'm going to keep a close eye on Domino's Pizza. I think we could pull back and then have a nice swing trade to the upside. So I'm going to be live on YouTube for a little bit longer, and then I might take a different path at the end of the year or before that. I'm kind of getting old, sitting here every day for 21 years, and I think I need a break. I've had a couple of health issues in the last couple of years, and I think I just need to get out and get more sun. But I work a lot. I mean, I'm not a lazy guy, that's for sure. But I'm getting up there in age. So we got the 200 EMA at 457.92 to hold for Domino's Pizza, or it could fall to 453, or even back down here to the slower support of 446 for a very strong buy to swing it back up to the upside, with a resistance to break right around 476.40. So that's it for the sneaky snake trading strategy. This video is a little bit longer always when I do my earnings, and I'll go back through the week, next coming week, and I'll look at, because I can't remember all these that I did, but I do have a reference where I can live, I can go back this recording and I can see what did I call, and we're pulling back, so I'll go back to the video and I say, oh, I think we're going to hit this here or this one right here. But I play it day by day right now because we are at a high resistance, and we keep going. But always remember, the retail trader is the ones that are buying the dips. The fat cats are trying to rotate the market. They think we're too high just because Trump's president, and they've got this psyched in on this tariff inflation crap, which I don't know why they weren't worried about it when I was paying 30 to 40% more on my merchandise 2 to 3 years ago. I didn't hear a peep out of them when we had high inflation. They didn't give a shit. As long as the companies make more money, that's all they care about. So let's get on out of here. This is a sneaky snake trading strategy. I'm going to be a little bit standby this coming week. Just play it day by day, mostly by the dips. And I'll constantly trade in the SPY and the SPX. So if you want to watch to learn how to trade the SPY and the SPX with me, I think they run a lot better with patterns. Here maintains a price target on Domino's Pizza to $5.50. So they got a $100 markup on this thing. It's funny. Earnings sucked last time out. Well, they're about even. You see, it took a little while for the thing to bounce up. Triple bottom right there. Boom. So, everybody have a great day. We'll see you tomorrow. Retail Traders, where I talk about chart patterns, moving averages, and being in the now. Make a comment in the bottom if you feel the market's going to go either way, or if you got a mention that you want me to look at throughout the week. I'll talk about it live on YouTube. Bye-bye.